Sanjeev Bhasin is also joining us, and we'll take that point forward from the market standpoint. Sanjeev, so much of hue and cry about impending correction, and what we got was just 10% from the recent top on mid cap, small caps. And between 14th of March and now, which is the week, we have clawed back more than half of it, especially non banking PSUs. Is it over before it even began?
Yeah, good morning, Ajay. Well, that is what typical bull markets are. You can keep feeling the fear when the markets correct, but they had reached zones where there was overbought readings on a lot of stock sectors, and the SEBI diktat, the overall play on stress test on mutual funds, all that meant that an artificial correction took place. Remember the words artificial corrections never last too long, but they are painful. But in bull markets, the retracement is sharper than you thought. And Ajay, we live in strange times. The Dow, the Nasdaq, the S&P, the Japanese Nikkei, all are in a upward momentum. New highs are across the board. So I think that it's about time India started to smell the coffee, and we think that the result season will be boding extremely well. Now everything is on earnings, and short-term macro can be, but we think the economy as such is doing very, very well. And now, as we get more clarity on elections and so on, you should see one more rally coming before the election. And I am very, very positive now on some of the mid caps, particularly the PSUs. I have been bullish across the board on oil marketing companies, on REC, PFC, some of the banks, particularly say a bank like Union Bank. I think numbers will be stand out. We had a buy on this closer to 55, 57, then 100, 140. I still think Union Bank is headed to 200. And selectively, we think stocks are going to do extremely well. Cement, gold lenders, REC, PFC, your the mid-cap banks, and I think that the broader market will again start to do well, but it's going to be the Nifty which can actually spearhead on the back of Bank Nifty, which I think can be a huge outperformer. Falling yields and lower inflation bode well both for the indices and for the banks.
Bit of a weather it seems, and Holi is approaching. Please take rest, otherwise you'll get drenched and you'll fall sick, and our viewers will be devoid of great trading ideas in a rebound.
Yeah, you're in a sweatshirt and everything. How bad is the situation, Sanjeev?
Well, Avan, actually, I have just reached London. My daughter's graduation, so I am on leave for a week. So it is 14 degrees here, hence the cold. So it was a surprise. I just flew down, and I thought I'll take a holy break, in the sense the holy festival break, and that's why the little warm, wear.
When you're joining us London time,
Yeah.
thank you
for that. Yeah, it's quite late.
So committed, 3 a.m. Okay. That aside, then, wanted to put the spotlight. We were talking quite extensively about Reliance Industries as well, and clearly the analyst view is that the earnings downgrade cycle is now likely ending, and that this new $10 billion debt reduction is going to be quite critical. At 2,900 levels, what's the view?
Firstly, Avan, thanks for the compliment. Yes, it is 3 a.m., but like we said, markets never sleep, and so do the participants. Our duty is towards helping people come back, and we were saying that you will get a sweet rally, closer to Holi and beyond. Reliance has been a bellwether. Now we know that on the added front, the new entrants into their new verticals all are going to be capital intensive. Oil to marketing OTC has started to generate cash, but still there will be talk of how they can sell extra stake and so on. However, like we said, it has been Reliance which has been the pillar which has taken the index to new highs. We still think, sorry for the throat, we still think that banks are now going to add up. HDFC Bank could regain its momentum. Like I said, most of the bad news is in there. 2-time price to book is a very good time, but we still think Reliance is headed higher. Sum of parts is 21 lakh crore market cap. Over a period of time, we think 25 lakh could be very much on the cards is somewhere during this year.
Time, Sanjeev, Let's get in your take then. What's the outlook when it comes to the entire consumption basket? Where is it that you're finding preference? I know you've spoken about a lot of those QSR plays. Would it extend to maybe some new age tech as well?
Correct. Avan, Zomato has been the star over there. PB Fintech has done extremely well. Devyani, I think, is an outlier. It will be over a period of time as the spending patterns in rural India start to pick up. You can add, what has happened is there is replacement taking place in the basket from Pizza Hut, more preference to against Domino's, and that constant change of preferences will see some more market cap being added to Devyani. We also like we said in the rural income, Bata and Patanjali. In fact, Patanjali has been on record as that one-off which they made as a statement for cure on illnesses. And they've, I think that will be part and parcel that episode gets over. They are gaining more and more traction in their, anything to do with the food and after the acquisition of Ruchi Food, we like Godrej Consumer, we like Nestle as a top line in Nifty component, but ITC could be a dark horse here, given that the overhang of BAT selling its stake now means that over a period of time there could be a demerger of the cigarette business, which will be really value accretive. See, ITC used to be in the low single digits as far as margins go on their FMCG business, which is now expanded dramatically. And I think that could be a real money churner over a period of time. So ITC is a dark horse on the FMCG basket. And I think that could be a real good play, given that now we could look at the demerger of the cigarette business over a period of time.
I don't know if you've been tracking Reliance Power or not. Ajay tells me that it's been locked in upper circuit for 3 consecutive days now.
Well, Aisha, as a disclosure, we owned Reliance Power from that 3.5, 4 rupees and Reliance Infra closer to 85. That was a punt taken on the sheer market cap discount which it was giving. The stock has seen that Anil Ambani is in the process of reducing debt, paying back lenders. I think that all bodes well for this entity. It had got a large part of the, almost, I think 4,000 megawatts what it was generating, but the debt burden was a huge, overhang on it. As the process of power being an outlier has been there, all power companies have started to show positive EBITDA over a period of time, particularly the one which were servicing high debt. And if power remains in this surplus generation where, IRRs have improved, then that could be a real outbundling for them. But, like I said, we bought it when it was maybe 1/10 the price it was when it was a throwaway asset. Right now, there is a little bit of frenzy and ownership of power assets because they've been the best performing asset class in the last 2 years.
Okay, that's the view coming in on Reliance Power. Meantime, I just want to take a note of some of the interesting brokerage notes that have trickled in this morning. Goldman Sachs has come out with their latest report on the footwear industry. Metro Brands, Bata, they've initiated a buy and a neutral rating respectively here, saying that the branded footwear segment is underpenetrated in the country and has a long way to go, and that there's going to be sports and athleisure that will be multi-decade double-digit growth opportunities. IT, of course, we're talking about it quite extensively. CLSA has now said that there's a sharp downward revision guidance, which implies that there's going to be no major pickup in the second half, and they're cautious as a whole on the sector. Sanjeev, your stance on the space?
Well, like we said, Bata has been our top pick. On IT, we still think Wipro and HCL Tech in the large caps will stand out. Yes, there could be a little bit of to and fro on margins, but we think that, overall, the environment in the US is turning positive, which means if yields fall, inflation threat lowers, and if there is a rate cut, then that means attrition overall will be very, very positive. And we've seen the transition into cloud computing, into AI, and each large cap now has separate, verticals for that. So I still think HCL Tech and Wipro are two of our favorites, which you should add on all decline. Bata for us could be an outlier, purely because branded footwear and the, migration from campus to smaller to a tier 2, tier 3 to Bata and then contract manufacturing vertically, they are doing extremely well. as a disclosure, all these three stocks are in our portfolio.
Okay, Sanjeev, enjoy your UK stay, and we've got you up, or rather keeping you up till late. Thanks as always for taking the time out.
If you like this video, then like, share and subscribe to ET Now.